9 months ago, economist Peter Schiff came on this show and offered a warning.
Thanks to the Federal Reserve, everybody has so much debt that we can't afford to pay an interest rate high enough to fight inflation. But it is going to be high enough to cause a massive recession and another financial crisis that's worse than the one we had in 2008.
Joining me now is Schiff himself. He's the chief economist at global strategist at Euro Pacific Capital. Peter, Ken Griffin, founder of the hedge fund Citadel, said the rescue package for Silicon Valley Bank shows American capitalism is breaking down before our eyes. Do you agree?
Well, American capitalism broke down a long time ago, and the latest bailout effort is just another nail in that coffin.
Well, explain that for the viewers, please.
Well, you know, the reason that we are now having another financial crisis, and it would already be a lot worse if we hadn't made the mistake of backstopping all these insolvent banks, but the reason they got insolvent was because of the government. The Federal Reserve kept interest rates at zero for 12 years, quantitative easing, and during that time, banks and pretty much everybody else loaded up on low-yielding debt. But in order to keep interest rates that low, the Federal Reserve had to create massive inflation. They called it quantitative easing, and the adverse consequences really started to show up last year when we had these big elevated increases in the CPI. And so inflation was becoming such a burden on Americans that the Fed was forced into taking action. And so it raised interest rates and pricked the bubble that it inflated. And now all these institutions are insolvent at higher interest rates. We have a bigger debt crisis now than the one we had in 2008, which was also caused by the artificially low interest rates that followed the bursting of the NASDAQ bubble when the Fed kept interest rates at 1%. That inflated the housing bubble, but this time 0% inflated a much bigger bubble, which is why we're now having a much bigger financial crisis. But none of this would have happened had we stayed with a free market. The free market would have purged the economy from all these excesses a long time ago. And instead of having a bubble, we would have had a genuine recovery with real prosperity instead of the phony prosperity that we've enjoyed. And now the chickens have come home to roost.
All right, Larry Summers is rejecting this idea that interest rates are behind this. Watch this.
These problems had much more to do with the failure of risk management at Silicon Valley Bank. I also think that if we didn't operate to contain inflation, we would have even higher interest rates, and those even higher interest rates would make more financial problems, not less.
So, Peter, what's the problem here? He was the one sounding the alarm on inflation in early 2021. You were as well. Well, what is it? Is it risk management or the interest rates?
Well, it's both, but, you know, the low interest rates is what led to all the excessive risk-taking, and so did the moral hazard of the 2008-2009 bailouts. Wall Street learned the lesson that you can gamble, and if you win, you keep the profits. If you lose, the government bails you out. So that was part of the reason for the risk-taking, but also government regulation, banking regulations, encouraged all banks to load up on treasuries and mortgage-backed securities because of the favorable way they're treated for accounting purposes. They don't have to take any haircuts. They don't have to mark them to market. And so it's government policy that caused all this. But none of it would have happened had we not had the 0% interest rates or the quantitative easing. And inflation, unfortunately, is about to go through the roof, because when President Biden said that nobody is going to have to pay for these bailouts, he's wrong. We're all going to pay through inflation because the Federal Reserve is financing it by printing money. And so the price of everything is going to go up.
Yeah.
And in fact, bank deposits are more at risk now than ever before because inflation is going to destroy the value of everybody's savings.
Peter, on that cheery note, thank you for joining us.